The 4-step method to high performance trading is about bulletproofing your daily routines, your executions, your skill set, your mindset, and your beliefs to execute your edge trading in live time. The 7-step daily routine for high performance traders is about developing daily routines and processes, building your headspace, your belief system, your mindset, and your daily habits to bulletproof yourself to master the markets. It's a free audio program. The links are in the description box below. They're both free downloads. Let's get started. Day trader Stacey Burke from Stacey Burke Trading, a mindset reset and a technical review. Today we're going to be going over the pump and dump. Yesterday we talked about first green day templates and just specializing, getting very specific so that you're hunting the same rinse and repeat opportunities. I'm not going to the screen looking for trades. I'm just looking for the same setups over and over and over again. Now, I mentioned this repeatedly. I like short selling markets. Certain markets obviously are not going to be in short selling cycles. And so you want to make sure that if you're selling, you want to be selling high, or if you're buying, you want to be buying low. I like pump and dumps, but I will look for the best setup on the day. Now, page 19 in the playbook, we have the basic pump and dump model. It's just an example from the British pound, but all markets are the same. They all do the same three things. We have the opening range. We have Day 2, typically expanding the range, the midpoint range of the week on a basic model can be our signal day, first red day, and the backside of the week, a pump and dump basic weekly template, Monday, Wednesday, Friday. Now, I just said that I like to short sell markets, so obviously I'm looking for markets that pump up. Now, there may be a fantastic Day 2 range expansion trade in the long direction. We've talked about this. There are several Day 2 templates. A great example on an index is a Day 2 range expansion for an explosive parabolic move. These are awesome trades when they show up, but I like to look for pump and dump reversals. But the basic template is about understanding that different instruments are going through different cycles, so there are opportunities almost on a daily basis for the same repeating setup. This is the setup that I'm looking for each day. Now, I may not get it every single day in my session, but this is the setup that I'm hunting. So when certain instruments are in the pump and dump template, I may have other instruments that have been dumping and pumping and continuing to dump, or giving me a trading range on the higher time frame for the same type of setup, an A plus nail and bail, an A double plus daily range, or an A triple plus high of week to low of week opportunity. At the same time, we have other instruments going through the dump and pump template, which avails traders to opportunities in either direction, which is why I often will use the phrase to traders, which setup are you hunting? There are 3-day setups, Monday, Tuesday, Wednesday, Wednesday, Thursday, Friday. We have 3 session setups, breakouts on the day, markets that will pump up for the dump or dump down for a pump. We saw that on Free Cash Friday on several pairs. And of course, we have daily signals, multiple days of breakouts. We have first red day, first green day, and inside days, which can alert us to high probability candidates that may be setting up for either a sell high opportunity, a 3-session sell high opportunity, or a 3-session buy low opportunity, whether that's a trend trade or a reversal trade setup. Now, I want you to just take a quick peek at this template again, and we're looking at the US dollar index daily chart. Now, the new month started, we have a market that's in multiple days of breakouts. Page 51 in the playbook, we have multiple days of markets closing in breakout when the new month starts. Now, in yesterday's video, I just talked about some simple basic concepts. We have the high of the month just prior to the end before it breaks out. The high of that candle is 99.29. And as I said in yesterday's video, simple basic understanding is 99 and a quarter. And all that gives me is an understanding of a price level. Now, one thing I want to emphasize to traders, if we're on the front side of a week and it's pumping up and I'm looking for pump and dump, I'm looking for backside of the week opportunities. A week may start where it's on the backside, it's dumping down first, and the backside of the week will be the pump up. And on Monday morning, the opening range, everything starts from Friday's closing price. Now, when the new week starts, we have the closing range of the month, closing and breakout. Friday closed and breakout outside of the previous peak made on the front side of the month. And we have a market now that's closed and breakout on Friday when the new week begins. And I want to just repeat to traders, remember what I just said. I'm looking for one setup. So I'm not trying to read this market. I'm looking at multiple markets for signal days. And the same process applies. I'm just looking at the closing price. Do I have a signal day hunting out the pump and dump opportunity for the New York session? Markets are going through different cycles at the same time. I can find instruments with this setup, whether it's a nail and bail, a daily range opportunity, a range reversal, or an all-in high of week to low of week opportunity. Now on Monday, the opening range in the new week, we have a market that breaks out. Paul Tudor Jones, if a market's giving you an indication of a range expansion, be prepared for the market to potentially move in the direction of that expansion. So there's our opening range. We have a market that closed in breakout, multiple days of breakouts, continuing to trade higher on Monday, day one. Now, right off the bat on the rollover, we have a market that's made higher highs, dumping down, and traders in the Europe-London session have the parabolic day two range expansion opportunity. Higher highs, dumping down. We're on the front side of a new week and a new month. We may be in a market now that is pumping up on the front side of the new week. Repeat to traders again that there are only two setups, a buy setup or a sell setup. We have multiple days of breakouts, the breakout on day two, the pullback into our breakout from our US session close, and the continuation, the parabolic buy low continuation trade in the London session. Again, there are only two setups, a buy setup or a sell setup. Simple concept, simple understanding. Every single market is the same. They will either break out and trend, break out, fail, and reverse, or be in a larger, higher time frame trading range. This market breaks out and continues to trade higher, closing in breakout on day two. And the closing price of the day is at 100.046. Now we closed in breakout on Friday above the 99.25 level. And we've now closed on Tuesday, day one, day two, typically expanding the range, closing at basically the 00 number. The high of the month is made on Tuesday, and Wednesday, day three, the midpoint range of the week trades up above that level and then closes back at our 00 level. Now we just talked about basic pump and dump templates. Now this is the US index, so obviously our US dollar cross pair currencies and other indexes and US based commodities could also be going through similar templates, which comes back to the fact where I repeat, I'm hunting the same setup on any instrument on any day. If we go back to Friday for a moment and we look at where the pump began from Thursday's closing price, we have come off of 99.25, pumped up into the close of the week, pumped up again into Monday's opening range, expanded the range and pumped up again on Tuesday, day two, trying to break higher. It can't break higher. It closes back at 00s, and it opens on a gap on Thursday morning, Asia. It opens on a gap, and we now may have trap volume up top as Thursday breaks down. Wednesday's the midpoint range of the week and our reset point. Now I use the US dollar index for traders to understand that as one market may be pumping, again we can have other instruments, US dollar cross pairs, that may be dumping. And we have instruments that are cross rate pairs that can give us signal days, understanding the setup that you're hunting. So we have instruments that will give us signal days. We can show up prepared, drawing our levels, and as I just talked about on the US dollar index, understanding where levels are at. So we have a market that's made a peak formation low at 100.37. 150 to 125 may be significant in terms of the level for taking profits. We're on the front side of a week. Now I just said I like markets to pump, coil, and dump, and we have a signal day. And we have a market that's given us a signal on the day in our earlier part of the session in London, in the London session, heading into our US window. Now we have our template set up heading into our US window. The basic pump, coil, failed breakout from double zeros heading into our US window. Traders from the masterclass will recognize again with the coil you can only trade in one direction, and 50 is an area that we can now trail through or take profits so that we can squeeze the maximum amount out of a winning trade setup. Monday offered traders that opportunity. Now this is the Japanese yen. It offered traders the same signal, and this is an example of where I come to the screen in my New York window and the train has already left the station. That opportunity for me on that setup, the same setup, but it was given in the Asian window. The same opportunity I'm looking for, but Asia got the trade. Let me repeat, I'm looking for the same setup every day if I can find it on any market. Now we went over the gold trade in a previous video, but I'll just run through that again quickly. We had a large range bullish day, a pump day. Heading into our new week, we had a breakout pullback on Monday, day one, a market that broke out and pulled back, closed as a bullish closing day with a lower low on the inside. Everything starts from Friday's closing price. We just said that earlier in the video. Friday's closing price. We had a pump day, a market that broke lower, made lower lows before pumping up on day one and closing as a pump day. London traded lower on the day, didn't take out the low of week level, and we have this setup starting for our pump, coil, and potentially a dump into our New York session. Went over this in the previous video, but again, just demonstrating major round numbers. Potentially 4,000 was forming resistance. That's Friday's closing price level. And major round numbers at 39.90 begins our parabolic collapse. A lot of traders asked about the timing. Now, gold metals open at 8:20 a.m. They are not U.S. indexes. U.S. indexes open at 9:30. We talk about the 10 a.m. club. This is a metal. U.S. index is open at 9:30. Traders from the masterclass will recognize again, when you have the pump and coil, you can only trade in one direction. And we can project a range expansion down for a profit target level, a 100% expansion of the range on day two, a pump and dump template. Let me repeat, I'm just looking for the same opportunity every day if I can find it on any instrument. Just popping back to our US dollar index for a moment, and we talked about this on our video the other day regarding the NASDAQ. Day one, day two, day three, three levels of rise. Day one, day two, day three. On the front side, we may have opportunities presenting at the high of week on a Wednesday. US Canadian dollar was on traders' watch list from the beginning of the week. It closed in breakout on Tuesday, day two, and broke out again on the day on Wednesday, day three. We had major red news at 8:15 a.m. non-farm ADP. We have a high of month level in place. Non-farm ADP pumps back up to the high of month level. New York Open gives traders the engulfment entry. We have an entry, we have a stop, and where the breakout has occurred, we can have a take profit level. Now, why is that? Well, let's go back and look at our daily chart again. We're in a market that continues to be in multiple days of breakouts. That's the A+ nail and bail. This market's trading higher. It's in breakout. We have a reversal setup, but we're trading back into a strongly broken out market at the midpoint range of the week. We're still on the front side of the week. Same setup, subtle variation, pump, coil, and dump for an A+ nail and bail session trade. If we just look at our major round numbers, traders were on the third day of rise. We've already had three levels of rise, but we have a 25 pip box. The market trades higher, continues to trade higher before non-farm ADP, doesn't quite get to our next major round number level, 50, but we have our New York Open. And so this is, again, an example of where we can tightly manage our risk. It's the sell high setup. It's the false break A top sell high setup in line with our day one, day two, day three template. Now, we went over Thursday on the NASDAQ and the other indexes, same setups. We had markets again day one. If you do your homework and follow the first trading day of the month, new timing cycle, watch yesterday's video. There's some homework there for traders to walk through their daily charts. Question being again is what setup are you hunting? And then you'll understand when you have signal days and templates offering you potential opportunities. We have a market that closes in breakout on day two. It's in breakout to the downside, makes a lower low, and closes as a pump day. This market is in breakout, though, on the downside. U.S. index we just talked about, day one, day two, day three, reset, heading into the backside of the week, the pump and dump. We're on a cross rate pair. We have a market that went into breakout, proceeded to trade lower, very similar to our NASDAQ template that we walked through the other day. Now, traders, this is where traders, if you learn this setup, a market that's in breakout, it's in breakout, and you'll notice on the very first day, breakout, pullback, continuation. Markets only do three things. On the higher time frame, the daily time frame, as I talk about, targeting opportunities on the daily time frame. A pump day in a broken down market. This market may now give us signals on the day where we have broken the high of day level. Is it setting up into our U.S. session? Now we come to the screen the next day. The market has given us signals on the day. It's broken a daily level before dumping down. Traders in the Europe-London window have looked at this and said the train has left the station. Traders from the masterclass, however, will recognize the lower low on the day and the coil coming in again at major round numbers. If we just use a simple concept of understanding, we look at the previous low of day level. Previous low of day level is below 25 and just above double zeros. So we've had three levels of rise for our pump day, coiling sideways into our U.S. session open for the parabolic collapse. If we just tighten this chart up again, a very simple understanding, a market in breakout, closing as a pump day, coiling sideways. We have trap volume above the double zero level, coiling into our US window for the dump. The pump, coil, and dump, the all in level to level on the back side of the week on the New Zealand yen. Friday on gold, I had a session nail and bail. There were other opportunities on other instruments, indexes, etc. But this is just a simple setup that I want to demonstrate to traders. We have a market that has pumped up right from the start of the day and made a high in our Asian window. We have the major round number level, $4,000. When we head into our US session window, we see our levels projected across. And I'll just highlight for traders simple understanding. Again, we have major double zeros above that level. So that box below double zeros down to the quarter level and 50 may be significant. Again, the low of our pin where that pump began. But below double zeros can be an area where this potential setup can fail, or we'll be looking to lock in profits. $4,000 level, significant potentially as our market sets up. And sure enough, we get our first hour pump and then our 9 a.m. pump, 50 level. Now just some simple stuff. We have an area that has already established higher time frame selling. We saw the breakout in the Europe-London window that reversed above 50. And this is where traders, again, understanding timings, levels, behavior of price, can be on a smaller time frame. We have the opportunity to position ourselves at the level with a starter, adding in the coil, and locking in the money, the session nail and bail. It's Free Cash Friday, taking the money and walking away. Again, I'm just repeating. Three levels of rise: the pump, the coil, and the dump. Same setup, subtle variation. Is it A plus, A double plus, or A triple plus? There was a pump and dump opportunity every single day this week, which I repeat to traders. Which setup are you hunting? I'm looking for the same setup every single day if I can find it. Same setups over and over and over again. The only variable is the trader. All markets do the same three things over and over and over again. Traders look for trades everywhere. I'm looking for the same setup, whether it's a sell high or the pump, coil, and dump. And if I can't find this setup, I'm looking for the same setup in the long direction if there's a best 90-10 playbook trade setup. Keep it simple, traders. Rinse and repeat. Scale it up in size. Have a great weekend, and may the markets go with you.